Well, welcome to New York. You know that song? I'm trying to sing it right now. Welcome to New York. You really don't want to hear me sing. I promise. You don't. But the reason that song is running through my head right now is because here we are, downtown New York, Manhattan, beautiful day, Tribeca, and I'm welcoming somebody to New York who always welcomed me to Stanford when the car was going the other way, when I was headed out to Hedgeye Risk Management, which he founded and he's the CEO of. But this is Keith McCullough's first trip back to New York City. And to mark the occasion, he's allowing us to switch roles. So he's typically trying to get me to drop an F-bomb, interviewing me, and it's been via Zoom these last few years. But now I'm not going to get him to drop any F-bombs because this is a rated G show. But we are going to switch roles, and we're going to find out a little bit more about who Keith is. So welcome.
Thanks for having me.
You're not from New York at all.
No.
You've joked with me for years about being Canadian, but I've never actually asked the very simple question, because Canada's kind of a large place.
Yeah.
So where are you from in Canada?
A town called Thunder Bay, Ontario, which if you get in a car from, the New York of Canada, Toronto, you go 20 hours north, you'll get there. So it's a long haul. I'm a long way from New York today.
I thought you were going to say Montreal or Vancouver or Toronto or something generic. Well, I guess there's not much to do there but play hockey.
Yeah, that's the big part of the big part of the life up there. It's right at the head of Lake Superior, which is beautiful lake. It's one of the largest lakes in the world, and I grew up there with my whole family still lives there or in other parts of Canada. So I'm the one that moved to the USA first. So
what's the name of the town again?
Thunder Bay, Ontario.
Thunder Bay, Ontario. I'm Googling it after we finish with this. But so my real question is, at what age did you start playing hockey?
As soon as I could. So probably 3, 4, something like that. 3, 4, 5 years old.
We have something in common. When I was 4 years old in Connecticut, it was the first and last time I was ever on ice skates. But you would presumably be ice skating on actual water.
It's all we did. Everyone kind of had their own either hybrid backyard rink, or then you had the neighborhood outdoor rink, and then you had the 9 indoor rinks that I think it's still 9 in Thunder Bay. So it's really a breeding grounds for NHL players. I didn't make it to the NHL, but there's plenty of hockey talent that's developed in Thunder Bay.
Wow. Okay, I'm really Googling it. So your life before Connecticut, what happened in that chapter of your life kind of after high school, but before Yale?
Well, I went to 4 different high schools, public high schools.
4?
And they weren't, New England prep schools. Let's just be clear about it.
Were you a bad student?
I was a bad boy sometimes, which may surprise you.
Well, I'm shocked. World, wait a minute. Hold on, time out. Oh my gosh, huge surprise.
Yeah.
Have you seen yourself on Twitter? Okay, keep going.
Yeah. I left home when I was 16 to play hockey. So in Thunder Bay, like my dad said to me, he said, "Look, it's time for big fish in a small pond to go to the bigger pond." And I didn't actually quite like the idea initially, but when I was 16, I left. I haven't been home really, since, other than for Christmas, and now in the summertime I'll go back. But what happened was that I'd get traded, and it wasn't always because I was bad or that, anything like that. But it was at one point when I was 17, I tore my knee up. So that team traded me to another town, and I had to go to their high school. And then when you're done the hockey season, you have to go back to Thunder Bay and find the classes that are aligned with the classes that you had. So my high school transcript is a bit of a Band-Aid, and
wow.
I did okay. I still ended up. I think I had the lowest SAT score at Yale for my class, so that was kind of the bridge. But it was literally I was living away from home, trying to live out my dream playing hockey.
Well, that's my boys attend Culver Military Academy. They recruit hockey players.
Yeah. Good ones.
Yeah, it's a good hockey. They don't play hockey. Thank heavens. Those hockey boys they're bad boys, some of them. In any event. So did Yale recruit you to play?
Yeah.
Okay, so that's how you ended up at Yale.
Yeah, so I didn't, back then I really didn't know the difference between, no offense to RPI or Boston University or anything like that. Excellent hockey teams, but Yale was one of the teams that was interested. So you do your 5 visits to the schools that are interested in having you wear their jersey, and then they figure out if your grades are good enough. So that's where I started. The whole Yale thing started to be a little bit more problematic, and but somehow I got it done, and it was when I ended up in New Haven, Connecticut from Thunder Bay, Ontario. I thought that was the industrial mecca of the world. I mean, it was. It's
pretty industrial. Well, I mean, it's pretty rough if you want to use that. I mean, it's not like Bridgeport, but still.
Yeah, I mean, in Thunder Bay, we grew up very modestly. I don't like to think of people being part of a class. I think that's I'm not going to use a bad word on your program, but I mean, my dad was a firefighter. My mom was a teacher, and I grew up with one of three kids.
Yeah.
My sister is younger than me, so is my brother. And
I would never guess that you were firstborn either.
Yeah, well, these Gen X problems.
No type A here.
We'll get into demographic discussion,
but
we have a lot of issues, Gen X people, particularly those that have left home at a young age.
I'm aware. I actually, my family is from East Haven, Connecticut.
Oh, really? Cool.
So so I grew up going to Pepe's Pizza when I would come visit Connecticut. So in the summer times, it was a lot of fun. I mean. But Yale is its own microcosm, truly, within that city.
Yeah. I mean, right before I got there, one of a Yale hockey player got stabbed at like a Popeyes. And I was like, oh, okay, this is a little, I mean, we have some of that in Thunder Bay. Just a little different kind of fights and stuff like that. I was like, wow, I feel at home. This is good. This is, the nightlife could end in a way that you just didn't, you didn't ordinarily.
Might want to stay close to campus.
Yeah.
So, championship?
At Yale, yeah. You mean hockey?
Yeah, you were the captain.
Yeah, I mean, one of the years I was, when I was a senior. They only have one, so that was my senior year, and we won an Ivy League championship, which is not as good as what we call an ECAC championship, which is what we won as a junior. That was, at the time, the best Yale hockey team in a long history of the Yale team, so we're super proud of that. Big time underdogs. We were definitely not supposed to achieve that, which is... to me, that was a big deal, and
oh, heck yeah, it was. Yeah. I mean, it was a culmination of a journey.
Yeah.
But all due deference, since we both love central bankers so much and PhDs in economics, we have that in common. You studied. Why did you choose to study economics of all things?
I being on a bus all the time, hockey bus. I mean, that's where I started, voraciously reading, if you will. Like, we didn't have text, we didn't have anything, and these are like long bus rides.
Oh yeah.
And that was really the subject matter that I was most interested in. I was always very interested in math, so that was my principal orientation. I should say my mom is French Canadian as a first language, so I went to school up until the 5th grade. I went to French only school.
Okay.
So I learned how to do math in French, and I learned how to do pretty much everything in French. So math was always the most accessible thing because I didn't have to, change all the words. And so
that makes sense.
So I'd read a lot, like a lot of finance, autobiographies, biographies, anything that had to do with history and math and the evolution of it all. That was my thing. So when it's a BA at Yale and you get to elect your major as you're kind of going through it, and since the only class I was going to get an A in freshman year at Yale was in French because I spoke French. I found
so you didn't take Mandarin. Got it.
Yeah, I did not enroll in the electrical engineering department of Yale. No, I was not on the track to be the biology major, the physics major, etc. So
that's a good economics department. Who are your mentors? And I'm not just talking about Yale in your time there, but in your career, who do you look at and say, gee, that person inspired me?
Well, my parents, for sure. I mean, I was so fortunate.
Oh, that's lovely.
My parents, my aunts and uncles. I mean, I grew up in a family of teachers, so they're all at some stage of their career. All my aunts were actually my mom and her two sisters. These three French girls were all the principal, of the French school. So I mean, I was. Yeah, those were my and my coaches. I was
sure.
I didn't until I got traded. I didn't end up with some bozo coach that was just like, there are a lot of bad coaches, hockey coaches,
sure.
But so I had some great coaches, and that's kind of all I knew up until going to Yale. And then all of a sudden I get the U.S. Olympic coach as my coach, Tim Taylor, who, God rest his soul, he's the best. He was beyond people that I'd known my whole life. He was easily the most important influence on my life. in any way, shape, or form.
That's, wow. But I'm pleased you said your parents, because that's so amazing. Since we're not talking about our 8 kids yet. And that's, I'm looking at the camera now, that's not our 8 kids. It's 8 kids between Keith and I combined. Okay. So you started off with an econ major as an equity research analyst.
Yep.
What was that transition like? And
Well,
was this here in New York?
Yeah, the first transition I had to make was accepting that I was not going to play in the NHL. So, the peak of my hockey career was, were those championship teams and really actually understanding how to be a great teammate more so than being an NHL star.
Yeah.
So I got, told that I'm not good enough to play in the NHL. And then I also, it was 1999. The best time to have a C on your Yale jersey with a resume that said, hey, look, I'm hireable.
Yeah, yeah.
So that's, it was really humbling. I mean, the amount of money that they were offering at that point was as much as anyone my dad, firefighters had ever made.
Sure.
So I was like, wow, this is better than playing in the minors.
Yeah.
So I ended up taking an offer from Credit Suisse. And then they put us on the rotation.
Whoa, full circle, because that's where I ended my career, was Credit Suisse.
Yeah.
Mainly because DLJ got bought out by Credit. I would have never chosen to work at Credit Suisse. But anyways, I digress. So
Yeah.
Credit Suisse, interesting. So what was your first industry that you covered?
Well, I was a generalist, so I covered everything, like anything that was on the desk. And back then there were IPOs like crazy, so I was like one of the people on the desk that would be tearing through reds, as they call them.
Oh, yeah.
They weren't electronic. You had to actually read the physical. And then you'd call, we're covering hedge funds. So that's how I became a buy-side analyst. I didn't spend a long time on the sell side or at Credit Suisse. It was just over a year. And then one of our clients at a major hedge fund hired me to be an analyst.
Gotcha.
From there.
So how long were you kind of a hedge fund guy?
All the way up until I started Hedgeye, so from 2000, I believe from 2000, 2000, just making sure I get all the years right, from 2000 until 2000 and late 2007, which was when Carlyle fired me as a hedge fund manager. So that's on this day, by the way, November the 2nd of 2007, that's when Carlyle Blue Wave fired me. So
well, happy anniversary.
Yeah, happy anniversary. I was going to write about it this morning because I usually do. I'm like, I just like saying that I got fired because it's the first time that I unequivocally was told, get the hell out of here. I was never told that on a hockey team. I was never told that on in any family meal.
Was it because you were aware of something that they weren't?
Well, I was short the market, and that was not working up until, from November 2nd of 2007, that ended up being the worst. It was the first down month for the S&P 500, and then...
Oh, I recall.
Yeah. So I started Hedgeye actually with that big bear market call, which is why some people think of me as a perma-bear, but not anymore, maybe.
Right.
Yeah.
What an interesting time, though. I mean, you saw the .com, you saw everything. You saw it all blow up.
Yeah. I mean, it's just, I think on Wall Street, you're largely a function of the cycle time you spend. So whenever you showed up on the desk, whatever job you had, that's largely going to impact. Lacey Hunt isn't Lacey Hunt, and you take any person who capitalized on the deflation, the long-standing deflation trend, it's usually where they start. And I was lucky. I went through 2 massive bubbles and ended up on the right side of both. And
So it's always interesting to hear when people kind of get onto Wall Street, because it's pivotal to me. David Rosenberg will tell you all day long, October 19th, 1987, that was his first day at work. I'm like, wow, that was a doozy.
Yeah.
And obviously it left its imprint. And he's somebody else who became bullish later on in his career and was disregarded, people literally ignoring the fact that you're not perma anything, that you're an analyst, and that you're trying to figure out where risk lies. So I'm curious, this Diary of a Hedge Fund Manager, when did you find time to stop and write a book? Because it took me 2.5 years.
Well, I thank God I had Rich Blake, who's he wrote it with me. He basically wrote it. Let's just be clear. I mean, if you were to read that book at that time, you'd say, "Wow, Keith's really gotten better at writing." I mean, because I was I tell this story often and apologies for people who've heard it before, but my first English lit paper at Yale was deemed ungradable. Like, and it was not C-, ungradable. Tim Taylor, my mentor, gets this call, like, who's this guy? Who'd you let into this place?
And why is he at Yale?
Which is kind of nuts that I write a 600 to 800 word essay every day that you're
Yep.
going to look at.
Yep.
So it goes to show you can start from a very low place and become a professional
And recover.
writer. You know, like, but those, the Diary of a Hedge Fund Manager was. I wanted to tell the story of how I ended up being where I was. Mm-hmm. You know, and a lot of, again, it's all about your cycle time. Mm-hmm. Like my first job actually on Wall Street was as an intern for a guy by the name of Tiger Williams, and he was the head trader from Tiger Management who split off. And to a degree, I did what he did, but I did it with analytics. He did it for trading. So he was the outsourced trader for all the Tiger Cubs that were spinning off.
I was going to say, this is, I mean, Julian Robertson himself used to wander around DLJ.
Yeah.
So, I mean, when the Tiger Cubs were born, that was like a big deal.
Yeah, so there were all sorts of these guys. So I was like, and I was just the guy on the desk taking trade tickets. Like black tickets were buys, I've learned that. I knew 3 colors. Black tickets were buys, red tickets were shorts, and what color the mail was, because I had to open all the mail. And that was my job. But what I learned from that period until I got my first job at Credit Suisse till when I was on the buy side was there are guys that crushed it, like John Griffin, who ran Blue Ridge Capital.
Yep.
And there are guys like Kenny Londoner, who ran Redcoat Capital, who eviscerated himself and went away. So I'm like, oh, that's how the game goes. It's a lot like hockey. If you blow up, you aren't in the game. So that's where I really, Diary of a Hedge Fund Manager, to a degree, tells my story within the lens of my traverse, but also why I got fired in 2007 and why I was starting this crazy idea called Hedgeye.
Right.
So
you set out to build the ESPN of finance. And let me tell you, when you're physically inside of Hedgeye, inside of your offices, it's kind of got that vibe.
Yeah.
But why is that something was that a headline writer, or was that your goal?
Well, I struggle. I still struggle. Like trying to explain what the hell Hedgeye is to a larger audience of people. So back then I was like, well, just think, and I mean people, like with a capital T and a capital P, because that's really always been my goal, is to democratize like world-class research for the people. So it shouldn't just be hidden inside of a world-class hedge fund where you just, you get paid your 2 and 20, nobody else gets to see that. This kind of goes back to, not that you asked, but my mom asked me, when I was doing well in the hedge fund business, she's like, I still don't understand what you do. And we're in front of the lake house in Thunder Bay, Ontario, and I'm like, I tried to explain it to her for the upteenth time, and she's like, she wasn't, and then she just said, well, how do you change the world that way? And I was like, I mean, I probably had 6 beers at the point that I was, just as like a Saturday.
Yeah.
And I just started crying.
Oh.
I was like, I said, I can't. Like, and here's the house that we built, this is the profession that I chose, and this house we're standing in front of is a beautiful lake house that my dad and my brother and I built, more so my dad and my brother, a lot more so for anybody who knows me. It's like, so at that point there's like no amount of money that you can make in this business that I think that I could answer this question properly. So when I went through this whole hedge, writing of the book, and I tried to tell that story too. There's more to this than just, than what everyone living in New York City, or as my former self, would think. And it's not to poo-poo what everybody does in New York City, not at all.
Sure.
It was my path and my journey. So when I really thought that through, like I was like, okay, over the course of the years, we're going to try to be the ESPN of finance. Like try to tell you the blow by blow of the score, like what's actually happening in the market, as opposed to what people say should, could, or would happen. So that was one way to do it. I think if I were to say it a different way today, it's more like the HBO of finance, which we have you on. We have
sure.
We have swearing. There's no swearing on ESPN, and but still,
there is a Ted Lasso.
There's a Ted Lasso.
Love it.
I've learned a lot from that too, because sometimes, as you know, I could be a little moody, but Ted, I thoroughly enjoy Ted Lasso.
So just to explain, you have investing summits.
Yep.
And so what are they, and to whom are they available?
So they're available. That's a great example of democratizing access, to the people. I mean, they're available to anybody who clicks on it. And the Investing Summit is to get the sharpest minds in the world like yourself and anyone who's timely and topical. I think that's a big thing, as opposed to just inviting the same old B-roll of
Sure.
who was good. And a lot of people get bad at this. They may have made a big call and never get another one right. So we're trying to. The Investing Summit is basically set up to okay, what is timely and topical? A good example this most recent year has been inflation. And just get the right people to have a real conversation with no commercials like this.
So I have to ask, because you look at the world through a very structured prism. What's a quad?
It is very structured. It is
It's a quad.
I live a very structured life. It's the same time with the alarm clock. It's the same organizational set of tweets. It's the same process, the same bean counting every day. So the quad is basically a 2x2 model, so growth and inflation. And it's measured and mapped in rate of change terms on a year-over-year basis. So if growth is accelerating, it's either quad 1 or quad 2. If growth is decelerating, it's either quad 3 or quad 4. And then you add the inflation component. If you have growth and inflation accelerating, that's quad 2. The opposite of that is quad 4, which is growth and inflation decelerating or deflation. So each quad, like when you just look at it, there's 4 economic scenarios. Goldilocks is quad 1. Quad 2 is rip-roaring fun like we have right now. Everything goes up, high short interest stocks, all the better. Today it was Avis, which I had a lot of fun with. Thing all of a sudden is halted, and it's like, oh, we're having a GameStop moment in quad 2. So that only happens in quad 2. Interest rates only go up in quad 2. And stagflation is quad 3, and deflation is quad 4. So what we did was we back tested these economic conditions against all asset classes, 50 different countries, all asset classes, fixed income, equity, commodities, obviously, and some things work in certain quads and some things don't. So I very much play inside of my box. Like that 4-quadrant box, or the quads as we invented it to be, is the most important thing that we do. I've built a big signaling process ahead of that because it front runs the quads, as the market would. It front runs the next economic condition.
So let's have a real world example. Let's just say commodities, because commodities was one of the hottest calls coming into really 2019, 2020, because it was so far disconnected from the stock market. There are all these charts running around that there's this massive dislocation. So you've got to be where commodities are. Where would commodities fall in the quad?
Well, commodities are along in quads 2 or 3. Those are the 2 quads that have inflation accelerating. So our model went bullish. It was one of the bigger calls, knock on wood, that we've had right in a while, which is in June of 2020. That was the big reveal. It's mathematically impossible not to have reflation to start and then inflation after that. So reflation is just the rate of change of deflation. Negative oil price is going to go positive, to use a very basic example in commodities. Or plenty of commodities that have been in structural decline or deflation for a long, long time. I didn't have to know about all the supply gaps and bottlenecks that we were going to have at this stage of inflation. I just had to do my job and, God willing, 2 feet on the floor every day and bean count what commodities are doing every day, which drives inflation higher. So now obviously we have rip-roaring inflation a year and a half later, and it's a good example of riding a macro trend. Riding a macro trend in its purest form, where you're not, who makes calls on commodities? I don't know, and I don't really care. I mean, what we know on Wall Street is that people are siloed, equity department, fixed income people, bond kings, queens, whatever, and commodities was kind of shot for dead. So that was a great example of any time we're in quad 2 or 3. You buy commodities. What commodities? It's generally based on our signaling process, which we can go through that if you want.
Yeah, because we're having a little bit of a disconnect right now. Actually, since you bring it up, we're having a little bit of a disconnect between the energy complex and energy. I mean, obviously, on a fundamental level, what's happening in China is playing into what's happening in the energy sector, and what's playing out in, with winter is coming in Europe and in China. That's both being affected by Russia, and how nice it's playing or not playing in the sandbox. How its capacity to deliver actual natural gas, because every part of the supply chain right now is all screwed up. How nitty gritty does something like commodities within the quad play out? I mean, right now we've got energy going in one direction and X energy going in another direction. Obviously, the China slowdown on the X energy side is playing into that to an extent, but at the same time, at the other end of the spectrum, winter's coming, and we've seen some radical moves and turnarounds in anything in the energy complex, which Russia clearly plays a hand in that and its own capacity to deliver. But does it get that specific?
Yeah, we measure and map every single commodity that trades from tin to cotton to copper. I mean, China, and we also have a quad for China. Like China's in deep quad 3 stagflation, which they have, the bad kind of inflation. And they're nominal, or
they have a stagflationary shit show. So
yeah.
I just used a bad word on my own show.
Very bad.
Continue.
And imagine this, we've had that view since the beginning of the year. China was going to have a shit show, quad 3 stagflation. If you backtest Chinese equities against any other quad, the worst quad for the stock market to be in is quad 3. So that makes a lot of sense. It's actually a very damning quad for most EM because these countries obviously can find faster levels of inflation than most because their currency, Chinese not so much because they don't allow their currency to be devalued, but if you look at Argentina, the go-to move is just devalue the currency, and then you get more inflation, you get more stagflation. But the Jedi mind trick this year for us was to stay long commodities and be bearish on China. Because a standard stock and shelf kind of linear econ, as I'd affectionately call them, would say, oh, you're bearish on Chinese demand, therefore you should be bearish on commodities. And that's just not the way that we do it. So again, we measure and map every single commodity on a price volume volatility basis, and that gives us our signal. And you have seen some blow-ups in different commodity prices, but then you've seen them resurge again. I mean, corn's the most obvious to have corrected and looked like it was going to break down. Now it's breaking out again. Lumber did the same thing. But you have seen a broadening of the base of inflation as these supply chain bottlenecks have come to be, which has only amplified our inflation call. But globally, we also have global inflation has been a big theme. So the question just is, are you South Korea, China, which are in quad 3 stagflation, or are you parts of Europe and Canada, for that matter, or the USA that's in quad 2, which is the good kind of inflation for now. It's not going to last, but for now.
It's not going to last. So that brings us to the Fed, my favorite subject in the whole world, the Federal Reserve. Take a step back for a minute and maybe share your reflections, because you're right, timing can be everything. So. There are a lot of hedge funds that are not in business, not because the hedge fund managers themselves weren't good, but just because, the invisible hand of the Fed is now very visible, and it's put them all out of business, or quite a few of them out of business. But how has the role, the intrusiveness, the role that the Fed plays, how has that evolved your view of managing risk?
Big time. I mean, let's just start with a very basic fact. If you aren't constantly evolving your process, you will not be a successful hedge fund manager across economic cycles. Every cycle, there's a different way to do it. And what happens in the hedge fund business is that people are either resting on their laurels of their former self, or they're just too dogmatic or too damn smart, too intelligent to change what they do. So I've had to change that, and usually it takes me to make a big mistake. So 2011 was a colossal mistake that I didn't believe that Ben Bernanke twisting the curve could change the economic outcome of Europe and or the U.S. stock market. So I went from bearish in 08 to bullish in April of 09 to bearish in 2010. I'm feeling it like, oh man, I've nailed 3 massive macro calls here. And then I just rode that sucker right into the lows and stayed with it, and voila, I guess he called it innovation. But to me, that was a moment where, okay, and if I go back and look at my former self, a lot of the criticism I give Wall Street, or what are Twitterati these days, is that you keep talking about what should happen in the world as opposed to what is happening.
Right.
And that's at that point I talked about it, the quads are a growth and inflation model, but then we started calling it our growth inflation policy model. So to front run their proactively predictable behavior, we just need to know these 2 conditions. So then I just said, okay, I disagree with all of it, but I'm not going to make money because of that. Just trying to proactively predict human behavior in their case is I actually think relatively easy. Anytime you get a quad 4 economic condition, they go dovish. You can say that they shouldn't go dovish, they shouldn't do this, they shouldn't do that, which I agree with.
Yeah.
But I'll still go with the quad framework on what asset allocation decisions I'll make, irrespective of what I think in principle of all this money printing and moral hazard.
Well, but there is something a little bit different going on than what we've had to deal with, and that's real inflation.
Yeah.
And, people have been asking me, is the Fed about to make a policy error if they do this? Or is the Fed about to make a policy error if they do that? And I'm like, yes and yes. Mm-hmm. So, the Fed's pretty boxed in right now.
Yeah. It depends on how boxed in they want to be, relatively speaking, to how boxed in they actually are. They could just unilaterally state that inflation remains transitory when at this stage it's trending to new cycle highs. And the bond market raises rates for them anyway, which is exactly what's been happening. The 2-year yield has doubled, which only happens in quad 2. The bond market in 2013 and 2017, this year, has raised interest rates for the Fed. And ironically enough, in 2018, at the end of Q3, when Powell made his first policy mistake, the economy had peaked and he was tightening into a slowdown. So that to me is like the number one risk. Anytime I see the timing on the Fed's map, and this, you'll have an opinion on it as well, but if I just look at my quad map, we're going to hit quad 4 in Q2 of 2022. That's very bad. So if you raise interest rates in March of 2022, you will be tightening, like South Korea did, into a quad 4 slowdown. And that's when you talk about shit shows. 100% of the time that the Fed does that, the market collapses. Then they have to come up with the next idea, which in this case should be MMT, right ahead of the midterms. So that's currently how I'm thinking about what, if they do make a policy mistake, they'll try to reconcile it with the next innovation, I guess they'll call MMT.
That would require a massive change of leadership at the Fed, but it's clear that we've got a lot of changes going on in the personnel department.
Yeah.
Human resources at the Fed is really busy these days with throwing people out the door.
Yeah.
And I think the Biden administration has, it's probably with good reason that they said that they would make the announcement on Labor Day. And here we are in November going, hello, is anybody home?
Well, they had some trading issues with Fed members, I guess.
The scandals and everything. This is actually, and this is my point to your modeling. I would argue right now that the Fed is in uncharted territory for the Fed because of just kind of the confluence of events that have transpired in a very short period of time in an organization where everything's drawn out. So I'm wondering how this could, how a double policy error potentially could affect, how risk is viewed in a market that is, I don't know, where are stocks right now?
All-time high, 60th all-time closing high of the S&P 500 yesterday, 37th for the NASDAQ. Yeah. It's been great. Yeah. I think this is what, my former self absolutely would have been run over by this. I would have shorted the market the whole way up. I would have kept saying, okay, my 10, 12% correction is going to happen at a later date, and then I'd have no credibility, right? But again, if you understand the dynamics of what's happening, reopening, reacceleration, the timing of that, Delta variant rolling over, reopening, me coming to New York, it's just one of the many qualitative things you can say. But we have predictive tracking algos that track the entire economy across different mobility measurements. We listen to all the company conference calls. I have 80 analysts. So we see what U.S. Steel said about Ford and the auto manufacturers. We're seeing an unlocking of this supply glut. We're starting to see them reorder. Oh yeah. So that the power of that at this stage going into year end is as powerful gets. So I've been looking. If anything, the melt up that we've been looking for in the stock market is going to create. I think it's going to create this Wile E. Coyote moment of, oh my God, and now we're going to go down from up here. That's what I think next year is going to look like. And that with the Fed being completely in the wrong spot at the wrong time on this. Oh. Because if my inflation numbers are right, I have headline CPI running north of 6%. The Dallas Fed paper on OER or on rent is running 7, 8, 9%. And if I just plug that in my model, I'm being conservative on where inflation is going to be. So they're, like I said, they either outright ignore that and don't tighten, or they do, and they're in a tough spot. You're talking about the full-on, and that's why I think that there might be an actual
secular move within Fed policy, but by law, they're not allowed to ignore their inflation mandate. I mean, it's.
But they have.
Oh, but they have. They completely have. They've abandoned it. We're beyond average, blah, blah, blah.
I have 118 slides in our current macro themes deck that shows there are at least a dozen Federal Reserve data series, which include Fed expectations, New York Fed expectations on U.S. rents.
Yep.
Any nowcast that the Cleveland Fed, let's even use the Cleveland Fed nowcast for CPI, which just doubled and is actually north of 5%. So on their own metrics, what Powell did at the Jackson Hole meeting was, on some level, I'd say it was a lie. In fact, it was a lie. To anchor on what used car prices did in the prior month as his outlook for transitory inflation, when new car prices are double the impact on the CPI anyway, and we're ripping, it doesn't
And they're buying $40 billion a month of mortgage-backed securities, and the housing market is just ballistic.
Yeah. So they should have raised rates already, and the history, at least until it changes, until I screw up the next time, I go with if the economy's in quad 2 and interest rates are going up and the Fed's raising rates, it's fine. It's just when you raise rates into a slowdown. So they had their chance, they didn't do it, and now they're probably in a spot they don't want to be.
No, and tradition dictates that the Fed doesn't really do anything when there's a little bit of a political meltdown in the country, which, I mean, the clock's ticking on the December the 3rd next deadline for the debt ceiling. And I mean, fiscal policy, I mean, how did that manifest in your model? Because 42.3% of GDP injected directly into the veins of Americans in an 18-month period, how did that show up?
Quad 2. Quad 2 is the party.
Inflation and the party.
No, it's Quad 2 is a rate of change acceleration in consumption growth. I mean, Q2 of 2021 was 12.2% year-over-year GDP growth. I mean, the prior cycle high was 3.3. So that's where, and then we had the Delta variant, which peaked in August. Q3 slowed. It was going to slow anyway because that was the peak against the prior base effect. But and now it's reaccelerating again because there's $4 trillion incrementally in U.S. bank accounts right now, including money market deposits. So I still think it's going to be the biggest Thanksgiving in American history, biggest Christmas for us Irish people. Anywhere you go, you can see it. But most importantly, even if I didn't see it, I see it in our predictive tracking algos, and I see it in our quad model. Can
the quad give off false signals?
Well, the signals don't give off false signals. That's what they are, right? But the forward-looking quads can often be wrong, or the numbers can change. In other words, like my forward outlook for a quad 4, which is a real economic slowdown, which could be fairly dramatic against these types of numbers in Q2 of next year.
Well, it's all about the midterms.
If that doesn't end up being quad 4, it's going to be a quad 1. I don't know how you get there, but that's the whole point about market signals is they're very good at sniffing out where that quad outlook's going to be wrong. That's why I use the signals, because I'm not willing to. When I'm wrong, when I'm wrong in the market, what's happening is that my signals are changing. Therefore, it's telling me the quad's going to change. That's why when I'm wrong, it's very obvious when I'm wrong. I don't stay wrong. A lot of people do, right? They're just willing to say, no, this is my call. I'm going to stay with it. Well, unfortunately for me and my family, that's not how we make money.
So talk to me a little bit about volatility, because what I follow the most closely is the MOVE index, because the MOVE always is going to flash eventually credit risk before, and right now the MOVE is going in an opposite direction of the VIX index. So Treasury volatility is going through the roof, and equity volatility is still, as it would be apropos in Quad 2, is kind of on the floor still and not reacting at all.
Well, the MOVE can move in a good way or a bad way. The MOVE always moves when there's a change in growth and inflation expectations or the short end of the curve, because the MOVE is coagulated closer to the short end than the long end. But so our view's been, we're short 2-year treasuries, we're short 10-year treasuries, we're short 30-year treasuries, because anytime you get a breakout in the volatility of an asset class, people get out of that asset class. And that's what you should do if you're in Quad 2. You should be getting out of treasuries. Now, if the relationship was, and it's a very basic similar set. Like I try to build everything in terms of like fractal patterns. So you have a similar set being, like, to use a very basic one, the move against high yield OAS spread. Now, high yield OAS spread looks a lot more like the VIX. So unless you get the move moving up alongside the VIX and or high yield spreads, you're in quad 2. Quad 2 is a very volatile situation for people that are not positioned properly. There was a huge positioning problem a couple of weeks ago where you could see a lot of, I mean, who knows who they were or what they had to do, but you could see it all crowding into, I got to sell these, 1-year notes, 2-year notes, 5-year notes.
And what was the catalyst at the time?
Well, I mean,
it was the debt ceiling kerfuffle.
And it was these inflation numbers just keep coming in higher and higher and higher. So I'm a lot of things. I got a lot of issues, but I have never missed calling a quad 4 market meltdown. We invented the model, so that's pretty easy to say. But quad 4 conditions are when you have the move moving. The mother of all risks would be the move moving up, the VIX breaking out, and high yield spreads widening above, like 350 over on high yield OAS. And every time I've seen that, I just
Flip the switch.
Yeah.
So you're not a U.S. voter.
No. I'm a green card holder.
Well, yes.
With 4 American kids, a beautiful American wife.
But what do you make of what's going on in Washington, D.C. right now? I mean, I have never, in my career at least, I gave an entire speech in New Orleans recently that said, economics is politics. Politics is economics. You can't you can't disentangle the two. So, I mean, again, what are your? I'm not asking what your political affiliations are. I'm just wondering how you think politics itself right now is. I mean, because the fiscal spending that they're even contemplating is what spread out over a 10-year period. So it's not quite the same as giving handing out $1,400 checks like candy to Americans, direct deposited.
Yeah, I mean, this is unsustainable. I mean, I politically, I'm neither a Republican or a Democrat. I'm Canadian.
Right.
So, and I think most people.
I've always liked that line, by the way.
But it's an interesting, like today's election day, and my kids are home from school, and some of them are old enough to understand. And my son says, so who would you vote for? I said, nobody. None of these people earn my vote. Like I think at least over my time in this country, I've seen. I mean, both political parties have gravitated towards the same economic and monetary policy.
Yes, they have.
So I'm not, to me, it's disgusting. It's going to end very badly, and my job is to time when. But under no certain terms am I like sitting here like, hey guys, this is great. I just made, Avis rental car just went limit up, halted today, and I made a pile on it. You guys are awesome. Like I did. But it's not, I don't feel like that was it's a good policy that's driving some of these things, some of these issues that we have in this country. And I guess the only other, there could be a lot of points, but I think that the real problem politically is the tapestry of leadership. Like, where's the moral code? Where's the objectivity? Where's like when I said my mentor is the former, God rest his soul, former U.S. Olympic hockey coach. Where's that guy in America? Like, running a political party or being on the front lines. I haven't seen it in such a long time that it's almost like I live in Canada or I live in Europe.
Yeah, I mean, it is definitely conspicuous in its absence, and I think that makes it difficult for American children, especially because you want to be able to look up to and idolize people in Congress. I mean, becoming a senator, that should be a lifetime accomplishment. It shouldn't be licensed for insider trading. I mean, it's just laughable to me that they're criticizing what appears to have been a major insider trading scandal at the Federal Reserve, and it's the Congress that's doing the criticizing when they're the most notorious insider salespeople in the world. I mean, they've made more money off of their front-running their own policies than any entity on planet Earth.
Yeah, it's crazy. I mean, my colleague Neil Howe, who he wrote The Fourth Turning. We're in the fourth turning, and Neil's he's writing his next book, which he's been spending. He's like, he keeps telling me it's like I'm climbing a mountain. I'm like, dude, it's all about the other side. I mean, the framework that he gives is, to me, that's the most accessible framework because it's time and space, it's demographics, it's generations. the baby boom generation and or anyone older than them have signed off on this, and the only way to make it different is to get the next generation to take it over after they completely mess it up. That's consistent across all of human history. So I think we're watching that.
Yeah, I mean, we're watching the average age of a U.S. senator just continue to creep higher and higher and higher and higher. And I'm like, I mean, go away. I mean, make room for another generation of leaders. Clearly, the country needs better leaders. So talk a little bit about, because we both deal with it, talk a little bit about haters. Because I think...
Haters in my life? Or
just
on Twitter?
I'm talking about Twitter. Yeah. I mean, it just... there's all this, they hide behind anonymity, so that you don't know actually who they are, and they just spew and spew and spew, and it's not getting any better. No,
it's,
I mean, who raised these people? That's what I want. As a mother, I want to know who raised these people.
Well, to hate is not, I mean, it's not an uncommon thing, unfortunately. I mean, so perversely, I love, which I'm sure you can tell, I love to be hated. I love to be hated by old Wall Street, its media, and whoever on Twitter wants to come at me with some pseudonym or no name or not. Yep. Because to me now, you're my marketing. You are, as long as I can show your hate, I retweet it all the time. I can show the world how not to be. Like, you learn a lot by, I've always learned a lot, you learn a lot from people on what to do, but you often learn a lot more on what not to do. So I think the ugliness of it is an opportunity. If you just, that's how I deal with it. I'm just going to retweet it and let Hedgeye Nation come after you, because that's what they're like. They're not going to let you get away with being a hater of Danielle DiMartino Booth. I don't approach it the same way, but occasionally somebody will say, "Oh, you're just a shill for the Fed," and I'm like, then I have to retweet it out and go, clearly you don't have a Google function on your anything. You have no ability to Google anything, and then the whole feed just goes, poof. Do you not know that she read a book about how bad the Fed is? Blah 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 blah. And that's when I like to make examples of people, is when they're not just being hateful, but they're ignorant. And I'm like, so 4 kids. Yeah. How old? 14. Jack will be 14 this week. And then
Does he play hockey?
Yeah, they all do. So he's my first. He was born 5 days after I got fired, November 2nd of 2007. Exactly. So Jack's always been part of Hedgeye. He was always been bopping around, So he's a beauty. I love that kid. I love all my kids, obviously. But Callie's 11 years old. She was my first daughter. Lucy.
And she's playing hockey.
Oh yeah, she's the ponytail power, and very serious. If you were to hang out with Callie, she's like me. And then Lucy is my 7-year-old, and my 6-year-old's name is Reese. So.
And all 4 of them play hockey.
Yeah. My wife loves that. Yeah, she loves driving. No.
Yeah.
We're all over the place all the time, but if
maybe you can have 4 in traveling teams when they're in high school.
Yeah. Well, they play all. I mean, my wife played lacrosse in college, so they all, and she runs Westport Lacrosse in Connecticut. So, which cool. So they all play lacrosse. They all play hockey. Most of them play soccer. All the girls play soccer.
Yeah.
So
I've got a soccer player. My one girl's a soccer player.
I love that sport, because I get to go on the sidelines and there's no buffoons, yelling like hockey parents.
You'd be surprised. You haven't been to
I
Texas
go to the far
soccer
side.
Games. Try Texas soccer games. Boy, can they get crazy. And really?
Yeah, I try. I always take my dog and I go to a far place on the side where the players are, like in the corner. Might look like a bit of a creep, but it's a good sport.
So, what advice would you give to young parents? Because you've got a broad spectrum of ages. What's the best thing? Because you obviously come from a tight knit family. So, what's your biggest takeaway as what's most important for you to accomplish as a parent?
No snowflakes. Like, we don't. I do not. That's part of the current culture that I don't agree with at all. I mean, I think, constructive...
Cancel culture, blah, blah, blah.
Yeah, and raising our kids with constructive criticism is like a big deal to us. Not letting this, again, you did such a great job, and even if they didn't,
So participation trophies.
Yeah, I'm big on like parenting and coaching. I coach, spend a lot of time coaching too. When it comes to mentoring kids, I think the most important thing is their work ethic and being able to handle some level of criticism. I call it. I have an acronym. It's like kind of like the quads, but it's your ticker. Okay, so it's like you have to have talent, you have to be intelligent, you have to have a compete level, but you have to be resilient. Because whenever these two things are in question, that resilience is what is really going to make the difference.
Yeah.
If Danielle's getting chirped at on Twitter, she's one hell of a resilient Texan. Somebody helped you with that. That's good. You're not a snowflake, right? So that with my kids, that's a big deal. Whether I'm coaching them or they're my own kids.
Well, if they take that away with them, then they'll be independent, which 25% of American adults are not because they're living with their parents.
Yeah, the issue. The average American reads 7 minutes a day. To think about like all the issues that we can, that's the other thing. Like, make sure your kids are constantly reading books instead of these damn screens. There's a lot that we can help them with.
Well, I have one final burning question because I've learned a lot about hockey with kids at Culver and from you. What's your team?
What, my NHL team? This is kind of embarrassing. The Toronto Maple Leafs. We're talking like long-term cycle, long bear market. Long bear market.
Who's in the winning quad this year?
In the NHL?
Mm-hmm.
I don't know. The New York Rangers look pretty good. I don't think they're going to win the cup. I need more information. My Bayesian inference process says I need more data. It's too early in the hockey season for me.
Can't manage the risk.
The only thing that I know that there's still a very high probability of happening is that the Toronto Maple Leafs still don't win a Stanley Cup.
Well, it's okay. You could be a University of Texas Longhorn football fan as well.
Is that bad?
Well, we're in several rebuilding decades.
Several decades.
Yes,
well, you do have Matthew McConaughey.
All right. Yes, we do. Keith, this has been a blast. It really has. And I think we only had like 3 or 4. So we did really good on the obscenities part.
Yeah.
So this is still going to be at least PG-13. But seriously, thank you for coming into New York. Thank you for being part of the reopening of the economy. And thank you for taking this time today. I've learned so much, and I know the viewers will as well. So I appreciate it.
Thank you for having me. It was awesome.